discussions on reciprocal tariffs. This after he had only just returned last Friday from his week-long visit to America for the same. And he is going back again to persuade the Trump administration into delaying these reciprocal tariffs on India. And as fingers remain crossed on the possibility of delay in imposing these tariffs on India, exporters remain confident of a positive outcome, even as tariff concerns intensify. In fact, we spoke to Ashwani Kumar, the president of the Federation of Indian Export Organizations, and he said exporters expect to gain $2.5 billion in the aftermath of the tariff decision.
You see, like every country, having clarity of bilateral trade, this positive and negative ways. So I think this is a very good initiative by our Prime Minister. He visited on time. They discussed with Donald Trump, and we also appreciate the efforts of our Commerce Minister, Shri Piyush Goyal ji. He has taken this very seriously. But see, when this tariff war starts, that it takes time. I mean, it's too early for anyone to say what is in their mind and what is going on, what will be the outcome. So for anyone to predict this is very difficult. But I'm sure, 100% sure, each country will look for their own profits. Even if they have to lose 2 rupees, they will try to find out gain of 4 rupees.
Right. Sir, you also mentioned that there is a possibility of India gaining from this situation. You said we can quantify it at about $2.5 billion. Can you explain that figure? Where is that coming from?
That figure is not from anywhere, but we expect. This is our expectation that whatever the tariff war comes, in all the cases, I will say that India will be benefited. See, we will increase our trade. Of course, we will increase. You see, the garment exports, engineering exports, and many other sectors which are already in exports. Even US putting a duty of 5%, 10%. Ultimately, these things, of course, matters to the countries, but for the importers who have spent the billions of dollars in their business, so there will be some way out for both Indian exporters or US importers. They will come out some agreement. Ultimately, the consumer will pay.
Right, sir. Also, what is the level of conversation that is happening between the exporters, between organizations like yours and the government currently? I understand you also said that the CIM will again go to Washington for negotiations.
This is what we came to know from preparations. There are chances that he might visit again, and that will be the benefited for the country only. See, one thing is sure. See, to get something, we have to lose something. But both the trade, both the governments and Prime Minister Narendra Modi ji, he has very good relations with Donald Trump. And when it's come to the countries to country, that's a different. But when it comes to business, that is entirely different. But 100% sure, India will be having a good position in US, 100%.
So what are exporters demanding currently?
From whom?
From the government, and then relaying it to the US side as well.
It's wait and watch. Unless we know something negative or something positive is coming, because the Commerce Minister is very aggressive and he's taking view of everybody. But as of now, we don't know what is in the mind of US.
Amid all these tariff uncertainties, what we're also hearing from the Commerce Ministry is that within a month, there will be incentives for exporters. Now, these incentives were already announced in the budget, but they were not implemented yet. So the fast track, the implementation of these incentives will now be fast tracked. Some of these incentives, they are worth about 2,250 crores, and some of them are access to export credit alongside cross-bordering factoring support. as well as support to tackle non-tariff measures in overseas markets. These will be some of the incentives that will be provided to these exporters. We also spoke to exporters, and they said that they remain confident of a positive outcome of the talks that are happening between the Commerce Ministry as well as the U.S. Commerce Secretary and the U.S. trade representatives. We're also seeing that there might be a bit of an impact that we are seeing in the Feb export figures that we're seeing coming out on March 17, given the fact that some exporters are holding back due to these tariff uncertainties, which has also prompted the government to bring in a certain fast-track implementation of these incentives. The Commerce Ministry is also set to meet export promotion councils later this week on March 13th to seek their inputs, and we will continue to keep tracking all of that for you.
And the countdown to Trump's 25% tariffs on aluminium and steel begins as these tariffs come into force tomorrow. Markets around the world are jittery and are facing an intense sell-off. The US market saw a massive beating last night, with Nasdaq plunging over 4%, while the United States stock market has shed more than $1.7 trillion in value after Trump declined to rule out the recession this year. Asian markets too are shivering, with Japan's Nikkei, Hong Kong's Hang Seng, Korea's Kospi and Australia's ASX 200 seeing significant cuts. Even Indian markets opened lower this morning. And therefore, given the volatile global scenario, it becomes imperative to understand what's in store for emerging markets. We spoke to Sonal Verma, Managing Director and Chief Economist at Nomura, to decode the conundrum. Let's listen in to what she had to say.
Well, it's an extremely tough period because if the US does go ahead and implement the various tariffs that it's promising to on 2nd of April, which is something as a house we think is likely to get implemented, then from an economic perspective for the US, we are likely to see weakness in growth. We think it's going to be a year of below trend growth and higher inflation as the tariffs kick in. So that stagflationary kind of a backdrop actually ties the Fed's hands in terms of what they can do. And as you all were discussing, the US administration is also ready to take some short-term pain for what they believe is going to be a medium-term benefit for the US economy. For EMs in that backdrop is essentially, much weaker growth. We think disinflation is likely to still happen because higher tariffs on China does mean the risk of more dumping of those excess products in other countries. But then we also need to basically be ready for more volatility in terms of financial markets, in terms of more capital outflows, currency spillovers, which typically do have feedback loop back into consumers through the wealth effect and businesses because of uncertainty. So essentially, weak growth and more volatility is what it all means.
And moving on, it's an NDTV Profit mega exclusive. IndusInd Bank is facing significant challenges that have led to a substantial decline in its stock price and market value. Today, its shares plummeted by nearly 26%, erasing approximately 18,300 crore rupees from its market value, making it the steepest fall since March 2020. Several brokerages have also downgraded the stock and cut their target prices due to concerns over weak internal controls and governance issues. Now, this comes on the heels of two events. One, accounting discrepancies in its derivatives portfolio discovered during an internal review that relate to past foreign currency transactions, which we broke exclusively last evening on this channel. And two, the RBI granting a one-year extension to CEO Sumant Katpalia, despite the bank's board requesting a 3-year term. Now, this decision has raised concerns about governance and leadership stability. And meanwhile, sources have also told NDTV Profit that PwC, which is the agency appointed by IndusInd for the external check, will submit its report in 2 to 3 weeks. My colleague Vishwanath, who broke this story last evening, was told that the bank discovered the gap in its derivatives portfolio in October last year, that's 2024 itself.
IndusInd Bank stock has taken a deep hit during the trade on Tuesday, dropping about 20% in intraday trade. This is largely coming because the bank announced that it had found certain discrepancies in its derivatives portfolio, which is likely to result in a 2,000 crore hit on its balance sheet for the fourth quarter. And this is because of which the bank will likely report a net loss. That's what analysts are estimating at this point in time. Now, an important addendum to this entire story is also Sumant Kathpalia's tenure at the bank. Sumant Kathpalia was appointed as the MD and CEO of IndusInd Bank back in February of 2020. Since then, it's been about 5 years, and Sumant Kathpalia has now received a one-year extension. However, it is important to note that the board has repeatedly been recommending a 3-year term for Sumant Kathpalia. It did so in March of 2023. The RBI at that point in time had only given him a 2-year extension on his tenure. And now again, in 2025, when the board sought 3 years extra term for Sumant Kathpalia, the Reserve Bank of India has only given a 1-year extension. So now questions are being raised whether the bank needs to find a successor for Sumant Kathpalia and whether he needs to step down as CEO after his current tenure ends in March 2026. Of course, according to Sumant Kathpalia, it's clear that the Reserve Bank of India is not very comfortable with the way that he's running the bank, and now it's up to the board to decide who the successor will be, whether it will be an internal candidate or an external candidate, or if the bank's board still wants to repose their faith in Kathpalia and recommend him as a CEO again.
And NDTV Profit also spoke to a series of banking analysts regarding the IndusInd Bank fiasco, including the likes of Abhizar Diwanji and Sriram Subramanian. Here's what they had to say.
There is a regulation lapse for sure. I'm not sure it's a governance lapse, but it's certainly a regulation lapse because as Vishy just explained, when the RBI circular came in, RBI basically said you cannot hold open positions in foreign currency assets that you take, and you have to hedge them. And rightly so, if you hedge them, you would not have an issue. Now look at the IndusInd problem. Either is it an oversight or is it a conscious management decision not to hedge and make some money out of a dollar position? Is the question that I guess the bank's management would have taken a decision in contravention to the regulation. So leave the regulation out for 2 minutes. The bank would have expected that if I have a position, and assuming this is all known and this is not something that was inadvertent, the bank would have said, yes, I'm holding a position and trying to unwind it. And of course, the 2023 circular kind of was not followed, would have been. In return to that, what happened is that we had a massive tumble of the dollar in the last 1 year. And that clearly has impacted or triggered the mark-to-market situation. And so it's a bet which has gone wrong if you leave the regulation aside. Now coming to the regulation lapse, whether it is a error on the part of the bank's management and the external agency will decide who the error was on, or whether it is a conscious open position taken by the bank in contravention of the 2003 regulation, is always going to be a debatable issue, which I don't think will get resolved.
As of now, it doesn't seem to be. As Digant said, it seems to be something where risk management is gone. The control systems in the bank don't seem to be tight enough. Governance is something where the management knowingly is hiding things. That doesn't seem to be the case. The moment they seem to have recognized it or found it out, they seem to have highlighted it to the board and then come forward and disclosed it to the markets. So I hope it's not a governance issue. We've at all, at least from the news that is out there, from what the bank has put out, it's not. It seems to be just a trade that's gone wrong, not a governance issue. More of risk management, more of bad trades, etc.
Meanwhile, Nifty and Sensex ended flat with only a slight positive bias. Sectors closed mixed, with realty gaining more than 3.5% and oil and gas pharma lending support to the gains. However, private banks and auto declined, and Puneet joins in with a wrap of all of the action.
Well, it was a session that the Nifty started in the red with down about 150 points at the start of the session, but ended up in the green. And that's one of the key things to watch out for. Despite having that 27% fall, in IndusInd Bank share price today, which is of course part of the Nifty. Now, while the weightage of the company and the bank is lower in the overall Nifty contribution, and that was led by positivity in stocks seen such as ICICI Bank being one of the biggest gainers today in the Nifty 50. Apart from that, we also saw the mid-cap 150 end in the green as well, showing the smart recovery up about 0.42%. But the small cap 250 was still down in trade by about 0.65%, and it continued its momentum on the downside. When you look at, of course, one of the biggest stories in the market today was IndusInd Bank after the company reported, delinquency as well as the lapses in its procedures at the derivative desk. That did not give any kind of respite from the start of the session. It kept hitting the benchmarks at about 10% fall and then continued its momentum all the way down to 27%, losing over 19,000 crores in terms of market cap. When you look at one of the biggest gainers sectorally was the Nifty Realty in the session today. It has snapped its 3-day losing streak today and has been down over the last 2 to 3 months as well. So we saw one of the biggest gainers such as Phoenix Mills as well as Macrotech developers in terms of the Nifty Realty. When you look at some other sectors such as Nifty Finserv as well as Pharma, snapped that 2-day losing streak as well. Of course, the day was dominated by IndusInd Bank, and it'll be very interesting to see what happens with tomorrow, because we did see a lot of funds have exposure of more than 3%, such as HDFC, apart from Nippon Life, among others. But today, the news was centered around IndusInd Bank and some smart recovery in stocks such as ICICI Bank to end the trading session.
And Indian markets are appearing attractive following a 15 to 16% correction, according to ACE investor Manishi Raichaudhuri. Speaking to NDTV Profit, he highlighted the importance of investors being meticulous with their stock selection instead of making broad investments.
India incrementally is actually looking interesting after this 15 to 16% correction that it has suffered. Particularly in case of large caps, a few sectors, let's say financials, the frontline banks, I would say. Some of the industrial names, they've actually corrected to such an extent that, some incremental inflow could come back there. But it still remains a very careful stock selection market. One can't really paint it with a broad brush at this stage.
Meanwhile, Bajaj Auto has forayed into the electric three-wheeler segment. Enter Bajaj Go-Go, their dedicated brand of electric three-wheelers featuring a range of 251 kilometers per charge. At the launch event, Bajaj also introduced the Mera Bajaj app to locate the closing charging station, route history for drivers and fleet operators. Our auto reporter Tushar Deep was at the launch and has sent in a report on the new product.
After staying largely silent in the electric three-wheeler space of India, Bajaj Auto has unveiled its Go-Go line of electric autos meant for the passenger vehicle segment. Now, why is this significant? Because this particular space, the electric three-wheeler space, is growing at about 25%. The EV penetration is about 25%, and as compared to, say, electric four-wheelers, which is about 2%, and electric two-wheelers, which is about 6%. Now, let's talk about some of the features of this particular electric auto. It stands out from what we have seen in the CNG space so far, where Bajaj Auto is the leader, with LED lighting all around. If we move towards the back of actually inside this electric auto, we see upholstery which is comparable to cars, as well as badging here, as well as a wide seat for maximum comfort for at least 3 people on board. If you flip the seat, this is where the battery pack, where the plastic bag is. Below that, the rack, we have the battery pack as well as the motor for the vehicle. Now, this particular auto is powered by a 9 kilowatt hour as well as a 12 kilowatt hour battery pack with a claimed range of 251. Real world, you should expect a 2/3, which will be about 200 kilometers.
Now, Bajaj Auto has forayed into the electric three-wheeler segment, and we've also actually got an exclusive response coming in from the event.
In the financial year 24-25, which will end in March, we would have probably sold 55 to 60,000 electric three-wheelers. And we expect that the market in the next 3 years will certainly be at a 20-25% CAGR. So our own ambition will be to keep growing ahead of the market. Okay. So it's very difficult to put a specific number, but certainly ahead of this industry growth that we are expecting.
So number one in the industry?
So as we speak now, within 18 months of launch, we are at number 2. We are around 34% share.
How many months to number 1?
So, well, your guess is as good as mine. Okay. I think if as an organization we create products that meet customer needs and we're able to execute flawlessly, that should be a natural destination.
And ever since its launch in October last year, we have been bringing you updates about Texpedite, a startup accelerator program by Games 24/7. The cohort announcement was made in Mumbai, where after taking applications from all across India, 17 startups were selected for the program. These startups were handpicked by a jury of industry stalwarts, peers and experts. The selected startups, who are undergoing mentorship sessions and one-on-one connects with leaders, are set to gain multiple benefits from the program. Here's a brief report on it.
Texpedite by Games 24/7 recently announced the cohort of startups that are now taking part in the 60-day accelerator program. The program that was open to entries in October 2024 received an overwhelming 330 qualified entries from across 24 states in India. And while 60% of the entries came from Tier 1 cities, the significant representation of Tier 2 and Tier 3 cities was pleasantly surprising. This represents the growing entrepreneurial spirit of digital India. In fact, a better indicator of this is the fact that 58% of the applicants are building AI-focused products and solutions. 22% entries for gaming and 15% entries by people looking to bring the next revolution in inclusive and assistive technologies. The list of startups that made it to the 2024 cohort are Ficus, Be Able Health, Cairo Vision, Chitu, Koira, Gabify, Glovertrix, Homeground, Laya Plus, Ample.ai, Noha.ai, Clan, Skitty, Spoda, Tutti Frutti Interactive, Walkbot.ai, Zuron.ai. A VC panel discussion held at the event helped these gain invaluable insights about how VCs select ideas and people that they back, challenges, solutions, and what a fruitful investor-founder relationship looks like. Present startups were also given a chance to present a brief elevator pitch about their product. These 17 startups who made it to the cohort are now being mentored by a renowned panel of mentors who are guiding them through the building stage using their own experience and industry insights. As these startups undergo this journey of growth, we will be keeping a close look at Texpedite, looking forward to the positive impact these people and their ideas will cause in their respective fields.
And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome. This is KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every day. Well, today we're taking a little bit of a path, rather detour, and we're actually talking about a large cap, well-known bank, and that is IndusInd Bank. We've had some updates which are concerning, and that's also the reason why IndusInd Bank has actually taken a sharp knockdown by as well over 20% on an intraday basis. We're going to cover a lot of aspects, but because this is KYC, we want to, as usual, start with what this particular bank does. So it was incorporated back in 1994, and the founder, of course, is Srishant Hinduja. The bank currently has about 4.2 crore customers, and it has a network of about 2,600 branches across the nation and well over 2,900 ATMs and cash recyclers nationwide. Now, in fact, IndusInd Bank, as being a part of the Nifty at one point in time, it's a bank which everyone knows about. And of course, a lot of our viewers could have potentially also banked to win IndusInd Bank. But in terms of its product mix currently, about 25% is a vehicle finance, microfinance comprised of another 9%, and of course gems and jewelry with about 3%. But most of it is still with corporate and retail banking, and that's as far as its operations are concerned. Let's move on and talk about the fundamentals of the company. So along with that, we consider the balance sheet, then the income statement. In cases of banks specifically, we actually take up the balance sheet and then we consider the income statement. We also discuss the operational metrics and, of course, not to forget the asset quality as well. And then, of course, we move beyond the shareholding and talk about valuations, street credentials, and street coverage as well. So as usual, let me take up the aspect of the balance sheet. And in terms of that, firstly, we'll start off by looking at the advances and, deposits for the bank. And over a 3-year CAGR, it has done quite well. That should be up for you on your screen soon. Yeah, there you have it. So firstly, when it comes to advances, we've seen about a 17% CAGR and deposits at around 14.5%. Are they spectacular? No, but they are reasonably strong in terms of the growth that we are seeing for this particular bank. And CASA also moving up around 10% in terms of CAGR. It has a reasonable capital adequacy ratio, but this one has come off quite a bit over the course of FY24 through the first 9 months of FY25. So it has fallen quite a bit. But do remember that the quarter gone by wasn't just that, but the quarter before that as well, had led to a lot of precipitation. And there were a lot of challenges with respect to capital adequacy as well, among many other factors and challenges, which is why this particular capital adequacy has come off to a certain extent. This is as far as the balance sheet is concerned. So when it comes to some of these aspects, again, most of it is pretty steady, and we're giving it a thumbs up given the kind of size at which the bank currently operates in. So which is why we felt that these operational metrics were good enough for this particular size. So it's going to be a thumbs up there. Let's move on and talk about the income statement now. And when it comes to net interest income, that has also seen a steady 15% CAGR over the course of the last 3 years. Its operating profit has grown about 10%, but its net profit has grown around 45% CAGR. Why is this the case? Well, obviously, we're looking at the provisioning which has come off. So in terms of these metrics, the bank looks a lot more positive. And especially when it comes to your top line, that is your net interest income, growing at around 15% over the last 3 years. Of course, notwithstanding the numbers that we're seeing for 9 months FY25, that stands around 16,000 odd crores. Now, we are not entirely certain as to what it is going to throw up for the whole of FY25. And based on that, we could potentially see a little bit of a slowdown in the net interest income as well, and naturally we could see a consequential impact on profitability, and hence your 45% CAGR could also be a little bit on the moderated end towards the end of this financial year. And we're just about 80, 19 odd days before we come to the end of this financial year, and we'll have a better idea of how IndusInd Bank does. That's of course notwithstanding the current challenges that the bank is currently facing, and because of that, and we're going to talk about that in a lot more detail. In fact, that's the reason why we took this up on KYC today. So this as far as your income statement is concerned. We move on and talk about the operational metrics now. And with respect to costs of deposit, that's remained steady, but with a little bit of an increase in the third quarter of FY25, that stands at around 6.6%. Your net interest margins have also come off from well over the mark of 4%. It has now dipped to below 4%, 3.93 to be precise. And cost of income again rising to around 52.5% against 47.5%. So some of these metrics are not exactly, I would say, desirable. And return on assets has also fallen quite a bit. While we've given it a neutral stance right now, this is bordering on a negative right now. But we wanted to give the bank a little bit of a benefit of a doubt, of course, notwithstanding it's the latest that we've had. That said, let's talk about asset quality. Asset quality has certainly worsened, and we've seen at the end of 9 months FY25, we've seen gross NPA ratios rise to 2.25%, and for FY25, that stood at around 1.92%. Similarly, if you consider the net NPA ratios, those also rose to around 0.68% against 0.57%. Now, on an absolute basis, this bank is one in which, one might expect these ratios to be relatively higher, but they are not. We'll take that into consideration, but the fact that we are seeing a rise in NPA ratios is the reason why we're going to give this one a thumbs down. This is as far as his financial statements go. Let's go beyond, talking about this and perhaps address the shareholding as well. And shareholding has been very, very interesting over the course of the 1 year. While promoter holding remains steady at around 16.3, 16.5%, the FII holding has completely reversed. And in fact, FII holding has come down considerably, significantly over the course of the last 1 year. And well, as of December 2024, FII holding stood less than 25%. And when it comes to DII holding, that of course shot up. But naturally, if FIIs are selling in such large quantities, domestic institutions naturally will have a part in buying some of that bit, which is why domestic institution holding for IndusInd Bank has risen to around 42.4%. Well, based on this particular aspect, we're going to give this a neutral stance, a neutral rating on the shareholding. So this is as far as the banks are concerned. And now, want to talk about the valuations. Firstly, we must remember that the bank has corrected significantly over the course of the last 1 year. In fact, reducing by 55% in the last 12 months, which is why we are looking at the valuations at a significant discount to some of its other peers on the Nifty 50. So while IndusInd Bank trades at around 0.7 price to book, 1 year forward price to book, we are looking at HDFC Bank, Axis Bank and ICICI Bank, all of them trading at well above the mark of 1.5. And of course, for likes of HDFC Bank and ICICI Bank, over 2.5 times. This gives you an idea about the preference and the holding of shareholders as well, and whether or not they would in fact want to assign IndusInd Bank a higher price to book ratio, and that is certainly not the case. At this point in time, it does certainly look like it's an undervalued stock just based on its price to book. But there is a reason why the stock is in fact below the mark of 1, and for the many aspects that we are going to draw your attention to, notwithstanding the last 9 months and the kind of challenges that the bank has seen in terms of its earnings, in terms of growth, in terms of its asset quality and worsening asset quality. But of course, in the latest that we've had, the latest update that we're going to talk about in just a bit, where does that leave us when it comes to street credentials? As I was mentioning, that we have seen a sharp correction, a sharp 55 correction in the IndusInd Bank, as against Nifty Bank remaining flat over the last 1 year. So that's the other aspect here. So it's been a clear case of underperformance for IndusInd Bank, and in the last 12 months, it's not the first time that has fallen well over 18-19% in one single day. Now, we move on to talk about the street view. What is the street making of it? Well, I wouldn't make too much of what the street holds in terms of IndusInd Bank, because this very morning, we've had a whole slew of downgrades coming in, which is why for now, we're just going to hold on to it. However, for now, given the updated calls that are coming in since morning, we now have more number of holds and sells as compared to buys. The total number of buys in the consensus stands at around 25%. On the other hand, if you take 17 holds, which doesn't make up for much, and another 7 buys, that comes at around 24. So it's nearly 50-50 for those who are currently favorable and for those who are on the fence to selling the bank. So that's as far as the street view is concerned, which is why we're going to give this one a neutral stance as well. That brings us to the total rating of the bank based on what it has been. So if you consider how things have panned out over the course of the last few years in terms of its income statement, its balance sheet, its operating metrics and asset quality, moving on, if you consider some of the other aspects like shareholding, valuations and street coverage, overall a lot of these factors are not boding well for the bank, and hence we're getting a substandard 4 out of 8 rating for IndusInd Bank. Now, this is as far as the ratings are concerned, and as I was mentioning, the reason why we wanted to take this up is because of the latest issue, the elephant in the room, and that is IndusInd Bank has found an accounting discrepancies in its derivatives portfolio, and this amounts to 2.35% of the bank's net worth. My colleague Vishwanath Nair is now joining us to tell us more. Vishwanath.
So busy morning for IndusInd Bank. Of course, during the trade on Tuesday, the IndusInd Bank stock has hit about a 20% fall in its stock price. This was largely because of a discrepancy that the bank has found in its portfolio, in its derivatives portfolio, which is likely leading to an impact of about 2,000 odd crore. Let's explain the story, how exactly it happened. Monday evening, the bank comes out with an exchange notification saying that it has found certain discrepancies in its derivatives portfolio, which will lead to a financial impact. This financial impact is estimated to be about 2.35% of the bank's net worth as of December 2024. The amount here works out to between 1,500 to 2,000 odd crore. And this will be taken as a one-time hit during the fourth quarter results whenever the bank announces them. Now, what exactly happened and what are these discrepancies? That's what we need to understand. The first step to understand that is to know that a bank regularly accepts foreign currency borrowings as part of its normal course of business. Now, over the last 5 to 7 years, a certain type of internal trade has become the norm amongst the treasury departments of various banks. In IndusInd Bank's case, such internal derivative trades were undertaken for foreign currency borrowings, long-term foreign currency borrowings, which typically do not have a lot of liquidity outside of what the bank currently holds. Typically, in these long-term foreign currency borrowings that the bank undertakes, it converts these foreign currencies into domestic currencies, that is rupee, and holds it on its balance sheet. Now, in the course of doing its business, what the bank essentially does is that it swaps the foreign currency into Indian currency and then buys a hedge against this conversion from the external market. Now, the internal leg of this transaction is done at a swapped cost basis, which is the cost of swapping the two currencies, and the external hedge that they buy is taken on a mark-to-market basis, which on the prevailing market rates, there is a cost that is estimated, and typically the swapped cost and this mark-to-market cost are different. Now, because it's a long-term contract, 3, 5 to 8 years, the expectation is that by the end of the contract, these two costs will converge and the bank doesn't have to actually shell out any money on top of it. This is an estimate that the bank does depending on the market conditions, and it's reading on what future liquidity is going to look like. This is what happened at IndusInd Bank, and this was normal business practice. That is till September 2023, when the Reserve Bank of India came out with a set of guidelines which prohibit the bank from taking on any of these internal trades that the banks were typically doing. Now, according to those guidelines in September 2023, by April 2024, banks had to get rid of these internal trades from their balance sheet. What IndusInd Bank found in October last year, actually, is that some of those trades were still active on its portfolio, and that to unwind these transactions, you would have to end up paying a lot of costs, and that cost is what the financial impact that the bank is describing is roughly 1,500 to 2,000 crore. And this is why IndusInd Bank is currently on the dock. It is also coming at a time when IndusInd Bank's CEO, Sumant Katpalia, has only been given a 1-year extension by the Reserve Bank of India, as opposed to the board's request of a 3-year extension. And this is adding up. All of these negative news points are adding up and resulting in the stock falling about 20% during the day.
And following the announcement, IndusInd Bank, through a con call, issued a clarification last evening. And here's what MD and CEO Sumant Katpalia had to say. Listen in.
I think very difficult to answer this question. We have done all our due diligence when we've come and disclosed it. I think it's an estimate right now because the validation is still happening. And as the validation gets completed, we will come and disclose the number. In my view, I think the number should not be so much difference. It should be range bound, like you said, but very difficult to answer that question accurately right now. RBI continues to do thematic reviews in an organization. So they continue to KYC reviews, they continue to do loan asset reviews, they continue to do microfinance reviews, they continue to do credit card reviews, they continue to do corporate bank reviews. So it's an ongoing process with RBI. To say that I think There is nothing material right now which is happening to my knowledge, and I don't think we are to be worried about.
My colleague Vishy in fact spoke to the sources within IndusInd Bank who clarified that the discrepancies, while confirming that it took time to conduct checks. Vishy, can you give us more details here as well?
Okay, so what sources are telling NDTV Profit is that, well, IndusInd Bank is a large private bank, and as part of its normal course of business, it conducts large treasury operations on its book. Now, according to Q3 disclosures by the bank, the cumulative notional value of derivative contracts, foreign exchange contracts, and well as options adds up to about 15 lakh crore. Now, remember that this is only a notional value. The risk-weighted assets against this notional value is only about 17,000 odd crore. Essentially, what the bank has said is that the size of the discrepancy that was found and the size of the trading book that it holds is not comparable at all, and the discrepancies are actually very, very small. And this is probably why the bank was not able to detect these discrepancies sooner than it did in October of 2024. And now that it has found these discrepancies, what the bank is actually doing is that it has already informed the RBI about the discrepancy. B, it had undertaken an internal review which concluded recently, and that is why the bank is able to tell you what the financial impact is. And the third part of this transaction, the third part of the moves that the bank has done is that it has appointed an external agency to validate its own internal findings. The external agency, which is PwC, that is what sources are telling NDTV Profit, PwC will submit its report on its findings by the end of this month, and then the bank can come out with further details if necessary. The bank is widely expecting that the impact of this entire transaction, that it is estimating about 2,000 crore, that is unlikely to change by a lot, maybe marginally here and there. That is roughly around 2,000 crore worth of an impact is what the bank is expecting. Because of this, Q4 is likely going to be a very bad quarter for IndusInd Bank, and the bank is expected to report a net loss. That is what analysts are estimating at this point in time. Sources are also saying that while the RBI has not given any direct instructions on why exactly they gave Sumant Katpalia only 1 year versus 3 years that was sought by the board, the very decision of altering this extension points to the fact that the RBI is probably not appreciating Sumant Katpalia's leadership at the bank. And now it's up to the board to decide whether they need to look at any external candidates or internal candidates as potential successors for Sumant Katpalia at IndusInd Bank.
Right, Rishi, thank you so much for getting us all those details. But needless to say, brokerages have issued ratings downgrades on IndusInd following the announcement of the fiasco, and while others have issued steep cuts in the price target. Mika is joining us to give us more details. Mika.
So we've had a slew of brokerages that have downgraded the ratings. Kotak from a buy to a reduced, Prabhudas Leeladhar from a buy to a hold, Nuvama from a hold rating to a reduced rating, and MOSL from a buy rating to a neutral rating. Even other brokerages like ICICI, DAM Capital, Elara Capital, Equirus and Anurati all have downgraded the stock. We've also seen a 23 to 39% cut in target price. The lowest target price has been set by Nuvama at 750 rupees, while Kotak has it at stated at 850 rupees. And it's just key to note that the current stock price of the stock is lower than even the reduced target price. Now, lastly, what are brokerages saying? Well, Citi has also cut their earnings estimate for IndusInd Bank by 25%. The derivative position discrepancy could knock the earnings as well as net worth for the bank, and the recent developments have raised the risk perception. According to Macquarie, the current issues raise question on internal processes as well as the robustness of the bank's internal process and as well as compliance. And lastly, you have Morgan Stanley, which has stated that the visibility on the stock continues to reduce. They do see downside risk to the numbers post the company's disclosure and await for further clarity on the discrepancy.
Right, Mega, thanks for getting us all those updates with respect to what brokerages are making. But earlier in the day today, NDTV Profit also spoke to Neostrat's Abiza Divanji, and here's what he had to say on the bank's turmoil. Listen in.
There is a regulation lapse for sure. I'm not sure it's a governance lapse, but it's certainly a regulation lapse because as Vishy just explained, when the RBI circular came in, RBI basically said you cannot hold open positions in foreign currency assets that you take, and you have to hedge them. And rightly so, if you hedge them, you would not have an issue. Now, look at the IndusInd problem. either is it an oversight or is it a conscious management decision not to hedge and make some money out of a dollar position, is the question that I guess the bank's management would have taken a decision in contravention to the regulation. So leave the regulation out for 2 minutes. The bank would have expected that if I have a position, and assuming this is all known and this is not something that was inadvertent, the bank would have said, yes, I'm holding a position and trying to unwind it. And of course, the 2023 circular kind of was not followed, would have been. In return to that, what happened is that we had a massive tumble of the dollar in the last 1 year. And that clearly has impacted or triggered the mark-to-market situation. And so it's a bet which has gone wrong if you leave the regulation aside. Now coming to the regulation lapse, whether it is a error on the part of the bank's management and the external agency will decide who the error was on, or whether it is a conscious open position taken by the bank in contravention of the 2003 regulation, is always going to be a debatable issue, which I don't think will get resolved. Governance is if nobody knows what happened to that exposure and because of which the bank may end up losing 1,200 crores. That is a governance issue. That somebody just did not know what was happening. The other issue is a regulation lapse to say that I knew a regulation existed. I knew that there was a position in the bank and that position was consciously held because I thought the dollar would move the other way. Basically. So that's how I would differentiate between the two. What is right and what is wrong are again two different issues. But what I would very consciously want to say is that either which way it's a regulation lapse for sure. The governance lapse, I think, is a slightly bigger issue. That if one does not know what is happening in the bank, and that can be linked to the fact that, does a CEO get a 1-year term or a 3-year term? So I'm just trying to, kind of combine both these things and say that yes, banks which are currently trying to deal with profitability, some of them may have taken those decisions within their ambit. Some of them may have been, taken to say that this is a currency position I wish to take over a period of time. And there's an RBI circular, which is ultra conservative in a sense that it requires every position to be hedged. And it basically tells the bank not to take any foreign exchange exposures, which may or may not be a correct regulation, but at the end of the day, it's a regulation. The problem is the differentiation we need to make is whether it is a lapse, as in a management lapse, I did not know the circular, or I knew the circular, but I wanted to take a conscious move.
And that is all that we have for this edition of KYC. Stay tuned in for more. We'll be back in just a bit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also.
Hi, we're talking about Your Money Matters on NDTV Profit because we understand that your money matters. And I'd like to talk to you today about the pricing of your loans. That is the amount of money that you pay to the lender, the interest cost that you have to bear. You will be aware, of course, if you have a loan running, that the Reserve Bank of India recently cut interest rates by 25 basis points. Have you gotten in touch with your lender to find out when your interest rates are going to go down? What's the process if you are a new lender? And can you get a better deal? Can you shop for a better deal? We'll talk about all of that and more on today's episode. I'm joined today by Parijat Garg, who's a credit expert. Parijat, thanks so much for joining in and pleasure having you on the program. The first question is, how do you know when that reduction in interest rates will translate to you, and is it on all loans that this is applicable?
So first of all, thank you for having me here. And this is an important topic because rates have come down and we are hoping that in the near quarters, the RBI would further cut down the rates. For every borrower, this is important. So the new borrowers, of course, will get immediate benefit because they're going to get new loans at the lower rates. So for them, it is a no-brainer.